Okay, now we are looking at value added tax, which is a topic that we actually do find in paper 2. Okay, I'll start by explaining what value added tax is all about. Value added tax, commonly known as VAT, is the tax that is charged whenever goods are sold or services are rendered by a registered VAT vendor. A registered VAT vendor is a business or is a vendor or a business enterprise that is registered for VAT. Okay, there are two categories of registration that can actually be made. There is a compulsory registration and also a voluntary registration. Okay, when does the registration for VAT become compulsory? If there is a business whose annual income exceeds 1 million, it is required to register as a VAT vendor. So if the income exceeds 1 million rand, then it is compulsory. It is a must. It is law. You are supposed to be registered as a VAT vendor. We also have a voluntary registration, whereby any business whose annual income is less than 1 million rand may voluntarily register as a VAT vendor, provided that the annual income is in excess of 50,000 rand. So even though it is voluntary, okay, you still have to be making an income of about 50,000 rand, okay, so that you can actually be able to be registered, even though it is also on a voluntary basis. Okay, so apart from that, okay, fine, the other things that we are going to deal with in this topic, we also have got what we call input VAT. We have got what we call output VAT. Okay, let me explain exactly what input VAT is and what output VAT is. Okay, when we are looking at output VAT, okay, it is the VAT that is charged by the business enterprise whenever it sells goods or renders services. Okay, that is output VAT or output tax. Okay, so the price that the customer is charged for the goods or services includes output tax. That's why you find out every time when you buy something, you find out that there is VAT that has already been included. So whenever businesses are selling, there is VAT that is already calculated there, and we call it VAT output, output tax, or VAT output. Okay, we also have got input tax. Okay, when is input tax charged? Input tax is VAT charged or paid by a business enterprise in acquiring goods or services from another VAT vendor. The input tax is included in the cost of the goods or services. Okay, so if you look at output tax or output VAT and input VAT or input tax, the difference is that, okay, when we are looking at output, it is actually on sales money that is being received by the business where VAT was included. And then output is whenever payments are being made or when money is going out or purchases are made, then it becomes what? Input tax or input VAT. Okay. And then the VAT control account is a summary account where we record the total VAT input and also the total VAT output. Okay, so in this control account, which is usually a calculation that you use when you're answering most questions in your examination, you actually have on the debit side you record your input VAT, and on the credit side you record your output VAT. Okay, and then when you get the difference now between the two sides, if ever the credit side is going to be bigger than the debit side, it means you are going to have an amount that is payable to SARS, or the VAT that is payable to SARS. If ever the debit side is going to be bigger than the credit side, then you have got money or an amount that is receivable from SARS. Okay, let's now look at the calculations. How do we make VAT calculations? In South Africa, the standard rate for VAT is 15%. 15% is charged on goods and services in South Africa. Okay, even though we also have some other items that are zero rated, and then there are also other items that are exempted from VAT. Okay, let me also explain what zero rated items are and what exempted items are. Okay, if you look at the zero rated items, these are goods or services which are taxed at a rate of 0%. These items comprise mainly of basic foodstuffs and certain exports. For example, brown bread, milk products, fruits and vegetables, vegetable oil, canned pilchards, petrol and diesel. Okay, these are some of the items that are that do have zero rated VAT. So in other words, the VAT is there, but it is charged at 0%. Okay, and then when you say items are exempted from VAT, it means that these goods or services are not charged, VAT is not charged on them. Okay, either at zero, there is no VAT anyway that we talk about when we are looking at these items. If ever we say items are exempt from VAT, there is no VAT at all that is charged on such. Okay, and then examples of some of more commonly known exempt items are the financial services, transportation of people by road or by rail, educational services, especially when they are supplied by the state, rental of private residence, and so forth. Okay, all these items are exempted from VAT. Okay, so the calculations now, okay, that we do, okay, we do calculate to find out whether we have got VAT receivable from SARS or VAT payable to SARS. Okay, all right. So remember what I said, VAT in South Africa is 15%. So when we do our calculations, you will find out that, okay, there are items that are a VAT exclusive, then there are also amounts that you can be given whereby VAT is inclusive. What does that mean? When we say VAT exclusive, it means that the amount that you have been given does not have any VAT that is being calculated. When you say VAT inclusive, it means that that amount actually does includes VAT. Then how do we calculate the VAT amounts from VAT exclusive and VAT inclusive amounts? If an amount is VAT inclusive, then it simply means that, okay, we are going to say that total amount that is given times, remember we said it's 15%. So if it means if an amount is VAT inclusive, it means that amount is already at 115%. So in order for us to find the 15%, we are going to say 15 over 115 times the amount that is given, so that we can get our VAT from a VAT inclusive amount. But if an amount is VAT exclusive, that is just straightforward. We know that the standard rate for VAT is just 15%. We'll just calculate 15% of that amount that is given. Okay. All right, I'll repeat again what I said a little bit earlier. VAT payable to SARS. How do we calculate VAT payable to SARS? We say output VAT minus input VAT. How do we calculate VAT receivable from SARS? We say input VAT minus output VAT. Okay, let's now look at the last part, the summary of VAT input and output transactions. Okay, I would want you to master these transactions and you never go wrong whenever you are doing the calculations for VAT. Okay, this is everything that you need to know and to understand on VAT, so that you can never find any question in grade 12 that can actually give you any problem. All right, when we are looking at the opening balance on VAT control account, okay, if ever the opening balance is credit or it is output VAT, it means that it is a plus. If ever the opening balance on the VAT control account, okay, is input VAT or on the debit side, it means it is a minus. Remember, in your examination, sometimes you might not even have enough space to calculate your VAT using T account. So you just have to use the signs, the plus and the minus. So if ever the opening balance is on the credit side, it means of the control account, okay, it means it is a plus. If it is on the debit side, it means it is a minus. Okay, all right, let's proceed now. Let's look at all the items that make up output VAT. Okay, we have got sales. Okay, remember I said everything that is on output VAT is a plus. So we have got sales, whether cash or credit, services rendered from customer, that is fee income that is received, drawings by the owner, okay, they are also shown, okay, fine, on the output VAT, okay. Sometimes they can also be shown as a decrease of input VAT, okay. Goods or stock returned to creditors or suppliers, creditors allowances, they are also part of the output VAT, and it is a plus. Discount received from creditors or suppliers, it's also a plus. And bad debts that have been recovered, they are also a plus. Okay, now on the input VAT, okay, we have got purchases of goods or assets on cash or on credit, and then we also have service expenses, any other payment that is going to be made, be it for water or for electricity, okay. Goods or stock returned by debtors, debtors allowances are also part of input VAT. And then we also have got discount allowed, okay, and then we also have bad debts written off. All these are part of the input VAT, and they carry a minus sign. So whenever you are doing your calculation, you just have calculations. Remember that, okay, anything that is part of output VAT is supposed to be a plus, and anything that is input VAT is supposed to be a minus. Okay, I'm sure this information is going to be very helpful, and if you have fully understood these explanations, there is no way you can find a question in grade 12 that deals with VAT that can give you any problem. Remember, the reason why we do the calculations for VAT in grade 12, we want to either find the VAT amount that is payable to SARS or the VAT that is receivable from SARS. Okay, that is all on value added tax. Thank you.